Welcome back to part 2 of the League of Restorative Justice's video entitled Facts Assumed, Not in Evidence. I'll repeat here exactly what I said at the beginning of part 1, so you can skip forward if you've already heard it. With clear explanations and illustrations using simple third-grade math, the League will debunk the prosecution's allegation that Oasis's $51 million in spread fee earnings were fairy dust, fictional, an accounting trick. They'll reveal more of the misrepresentations told to the jury and display exculpatory evidence that Michael's defense counselors had in hand but failed to show at trial, despite the fact that doing so might have convinced at least one juror to question the fake news the jurors were being exposed to every day. Part 2 has a reenactment clip of the court-appointed receiver, Mr. Wiand, giving courtroom testimony that plainly contradicted the fairy dust narrative propagated by Mr. Murray, prosecution witness Matthew Childers, and Ms. Bedke. It also includes a partial reenactment of a very telling exchange between defense counsel Jessica Cassiola and Mr. Wiand, which took place at a hearing almost a year before the criminal trial. Part 2 wraps up with a summary explanation of why Oasis' financial condition and the status of the loans it owned belied the allegations in the civil trial that Oasis was operating illegally in defiance of CFTC regulations, and how both cases were founded upon similarly untrustworthy foundations. While it's not absolutely necessary to watch all the previous videos, in this exclusive series of reports from the League of Restorative Justice, we highly recommend that you do. Taken together, they represent the distillation of over 6 years of diligent research into the terrible tragedy that beset Oasis, its owners and lenders, back in April 2019.
The government claimed that Oasis's spread fee earnings didn't exist, that they were fairy dust, an accounting trick. But that can't be true because the math in evidence doesn't then work. We call this the whiteboard test because it's a simple illustration that defense counsel could have shown the jury on a whiteboard during Michael's trial. But sadly, they didn't. Let's break it down using rounded numbers. As you can see from the chart, if Oasis had deposited only $22.3 million, which both sides agree they did, then lost $62.3 million through trading, and then paid out another $9 million in brokerage fees to ATC in London, the balance in their account would have been a negative $49 million, but it wasn't. As Mr. Wiand testified, the record shows, as both sides agree, there was a little over $2 million left in the ATC account when Oasis was seized and trading stopped. That $2 million balance only makes sense if Oasis added back the $51 million in spread fees that it earned, or simply kept them in the ATC account, just as Mr. Wiand testified. Without the spread fees, the account would have ended up deeply in the red. To further illustrate this, let's use smaller numbers equal to Oasis figures with 3 less zeros on the end. Imagine this was your personal checkbook where you were keeping track of trading gains and losses and were handling thousands instead of millions of dollars. You're checking your checkbook entries against your bank statement, which shows a balance of $2,000. Your checkbook register would look like this. If the government figures were correct, you deposit $22,300, you lose $62,300 in trades, you pay $9,000 in fees, and you magically still have $2,000 left in your account. But of course, you would quickly see that that's impossible. It would be obvious that the $51,000 in spread fees you'd earned had not been included as a deposit like it should have been. That simple addition would make the math work, leave a $2,000 balance, and your account would agree with the bank statement.
What the jury heard instead of the truth. Even though no one disputed the deposit of $22.3 million or the ending balance of approximately $2 million, or even the trading losses of about $62 million, the prosecution stuck to the fairy dust story. During trial, Matthew Childers testified under questioning from Mr. Murray.
Mr. Childers, is this markup or this spread pay truly revenue generated by trading for Oasis?
No, again, I keep saying it's money taken out of one pocket and put in the other.
That was false, but the jury wasn't shown the math to prove that it was. Michael's defense counsel missed the chance to correct it. A simple whiteboard test like the one we just showed could have exposed this. But defense counsel never presented it. They also failed to show clear exculpatory evidence from their own expert, Mr. McFarland, who demonstrated that spread fee contributions were substantial, consistent, and had helped build financial stability over time. This first chart, prepared by Mr. McFarland for Michael's defense counsel, shows that Oasis's spread income, represented by the gray line, kept well above expenses for total loans principal plus interest obligations from December 2017 until the company was seized and shut down in April 2019. This second chart separates the aggregate loans from the aggregate interest and again shows that the spread income, shown by the gray line, was keeping well above both loans and interest obligations from December 2017 through to April 2019. The government claimed there were $15 million in additional loans that Mr. McFarland couldn't identify, so he included those extra millions in the chart here and showed that spread revenues net of company operating expenses were well above the combined outlays of interest obligations and principal withdrawals that lenders had taken back. There were 6 charts like these prepared for and given to Michael's defense counsel by their expert witness, Mr. Harold McFarland. None of them were shown to the jury in Mike's trial. Why? They clearly illustrate that defense counsel's highly qualified expert witness had proven the disputed fact that Oasis had earned substantial spread fee incomes, and moreover, that those incomes had consistently offset the company's monthly expenses soon after Oasis began earning them. Mr. McFarland became a certified public accountant in 1992, a certified management accountant in 1993. He was also a certified fraud examiner, computer database forensic analyst, licensed private investigator, and a member of the FBI InfraGard and Secret Service Cybercrimes Task Force who belonged to the American Institute of Certified Public Accountants, the Florida Institute of Certified Public Accountants, the Association of Certified Management Accountants, the Florida Association of Private Investigators, the Florida Association of Licensed Investigators, the National Association of Licensed Investigators, and the Association of Certified Fraud Examiners. Why on earth would Michael's defense counsel choose not to show the jury such powerful exculpatory evidence that their own extraordinarily qualified expert analyst had provided in such an easily understood graphic form? The prosecution's own witness disproved them. On day 8, the court-appointed receiver in the civil case, Burton Wiand, appeared as a prosecution witness. He had been materially assisting the prosecution for many months and billing for his and his attorney's time for that. Despite being their own witness, Wiand's testimony destroyed the prosecution's story. In response to Ms. Bedke's question, "So the only money associated with the trading was how much when you stepped in?" he answered,
Well, at the point in time when I stepped in, the account with ATC, which was the only trading account at that time, had $2,005,000 in it, and the account had about something like that, million dollars deposited in it. And it had traded over time in the trading that had occurred. The account had lost $62 million in trading losses. And it had also incurred $5 million in brokerage fees and another roughly $4 million of what they call rollover or expenses for maintaining positions in the account. That is some $72 million or more, minus. The only things that came into that account was a spread spread pay, which was markups or markdowns on the transactions that would come to Oasis Global FX, the trading company, but that money that came in was totally offset by the trading losses, the brokerage fees, and the rollover expenses. So that of the $22 million that was deposited in ATC, there was $2,005,000 left. And essentially you take $70 million of losses and you add $51 million of spread pay coming in, and you subtract that from the $22 million that was deposited in the account, and you end up with $2 million. The account was very unsuccessful.
He confirmed Oasis earned $51 million in spread fees. He confirmed that Oasis had lost $62 million in trading losses. He confirmed that Oasis had also spent $9 million in brokerage fees, and he confirmed that there was a little over $2 million left in the account. Finally, he confirmed that $51 million in spread fees were necessary to arrive at the $2 million balance. His figures at trial were nearly identical to what a thorough audit later showed. 8 months after the trial at a hearing in the civil case, he reconfirmed that spread fees covered most of the company's trading losses. Wiand didn't need to give such a comprehensive report of the figures. It wasn't in his interest, but he was apparently convinced that doing so would help the jury to convict Michael DaCorta. Since those figures conflicted with so many others the jury had heard, it may have done so by simply adding more confusion to the trial proceedings that the jurors had to make sense of. At a hearing on June 15, 2021, almost a year before the trial, he asserted that a conviction in Mike's upcoming criminal trial would benefit him. That came out in the following discourse with defense attorney Jessica Cassiola.
Now, would an outcome in the criminal action, according to your understanding, have a legal effect in the civil matter?
It would in a couple of ways. One of them is that convictions in a criminal action would be utilized by me, and I'm sure by the CFTC in those actions, in order to establish liability for me for collecting assets during clawback cases and things of that nature. And for the CFTC, it would probably leave the case with nothing more than a summary judgment to bring the case to conclusion.
When you say to bring the case to conclusion, in whose favor?
In favor of the CFTC.
Then later in the hearing came this exchange.
You mentioned also on direct that it is more beneficial if there's a criminal verdict finding of guilt, because then you can use that, I think you said, in a motion for summary judgment in a civil case. Is that accurate?
Well, the criminal conviction in these cases can be used as evidence in our cases to establish the underlying Ponzi scheme and whatever is in the charging documents that conviction is based upon. That's something that can be helpful to us that touched on our evidence burden.
So, it is fair. That is helpful to you. You just mentioned that it's helpful for you to have a criminal conviction.
It would be, yes.
Notice that in that 2021 hearing, held 2.5 years before a summary judgment was issued against Mr. DaCorta in the civil case, Mr. Wiand expressed the belief that a criminal conviction would probably leave the case with nothing more than a summary judgment to bring the case to conclusion, and it would be to the benefit of the CFTC. He also stated that Mike's criminal conviction could be used to establish the underlying Ponzi scheme, and he testified on direct examination at the trial 4 months later that he had personally determined that Oasis was a Ponzi scheme.
Mr. Wiand, were you also charged with evaluating the Oasis entities themselves?
I was. Absolutely.
For what purpose?
Well, when a receiver is appointed in this kind of case, you might think that should be the case. But the receiver's job is not to go in and say, okay, I'm a liquidator. The receiver's job is to go in and look at the business and see, should this thing be liquidated or is this thing something that can live? And so I need to, as part of my task, do an evaluation based upon the records of the business and the information I gathered to determine whether or not it was a viable business. And I did that with respect to the Oasis entities.
And what was your determination?
My determination was that the Oasis entities was not a viable business, and indeed it was a Ponzi scheme.
And on cross-examination by Mr. Allen, this exchange took place.
There has been no finding of guilt or innocence as to the allegations that are lodged against Mr. DaCorta as to whether or not he was involved in a scheme to defraud, correct? You don't get to decide whether or not Mr. DaCorta is guilty of a scheme to defraud, do you?
It's incumbent upon me in making my decisions as a receiver to determine whether or not this was a Ponzi scheme and whether or not he directed it. And I made that determination, and it is yes.
Further, although he personally made the determination that Oasis was a Ponzi scheme, he also implicated Judge Covington in the civil case by suggesting that she had determined the same thing.
And this was a Ponzi. This was a Forex scheme. It wasn't a REIT. It wasn't a real estate investment trust.
Well, there has been no finding in either the criminal matter or the civil matter that this was a Forex scheme. Isn't that correct? Judicial finding by a jury in either matter, correct?
I don't think a jury has found that, but I think you might find in some of Judge Covington's orders that the evidence presented to her, she made the determination that it was a Ponzi scheme.
8 months after the trial, at a December 23, 2022 hearing, it was revealed that the judge hadn't even known Mr. Wiand testified at Mike's trial. As we just read, in his testimony at Mike's trial, Burton Wiand, the government's own appointed receiver, said he had determined that Oasis was a Ponzi scheme. But here's the legal problem. Under the law, a Ponzi scheme is insolvent from the start, and the financial records, especially the balance sheet, prove that Oasis was not insolvent. Since Mr. Wiand was clearly drawing conclusions without benefit of a balance sheet, he certainly should not have arrived at and testified to the false idea that Oasis was a Ponzi operation. Balance sheets don't lie. Its balance sheet clearly shows that Oasis was solvent, meaning it could pay its debts. That was true, and it would have been obvious to anyone if the necessary certified accounting work had been done. Yet despite this fact, the prosecution repeatedly called Oasis a Ponzi scheme or described it as Ponzi-like, and used these terms in front of the jury multiple times per day. The legal test used to determine whether or not a company is a Ponzi is called the balance sheet test. A company has to be shown by its balance sheet that it was insolvent from its inception in order to be legally deemed a Ponzi. Oasis was not insolvent. Ever. The prosecution never produced a balance sheet. Therefore, on what basis, other than the personal determinations of people like Ms. Robinson and Mr. Wiand, did the CFTC and the criminal prosecutors conclude that Oasis was a Ponzi scheme? Why did they keep saying so without any evidentiary proof? Why that matters. To call a business a Ponzi scheme is to brand it a fraud. It's one of the most damaging labels in financial law. In this case, it was a false branding. Even worse, defense counsel failed to object. They didn't stop the prosecution from saying it again and again in front of the jury, not even when Michael DaCorta's erstwhile partner accused him of agreeing that it was a Ponzi.
How much money did he say he had lost?
$7.5 to $15 million.
From the FX trading? The Forex trading?
It wasn't clear to me what the total losses were an aggregate of.
How did you respond to that statement?
I was overwhelmed. I said, "This is clearly a Ponzi scheme." He said, "Yes, I know."
Michael's defense counsel didn't even demand that the term be excluded from trial. That silence may have made it seem like the defense agreed with the label. Mr. Anili testified that his friend and personal accountant, John Caliendo, had been hired shortly after August 2018 to examine the books and records that Mr. Anili had been keeping for Oasis. He said,
I was giving John access to all the books and records, but Joe would have to give him specific client information to help him as well. And I think John got kind of caught up in some of that. Even though I gave him everything, I think he trudged along, but I don't think he got very far.
Why were those records, which Mr. Anili testified he'd been keeping in Peachtree accounting software all along, never produced for the jury's or defense counsel's examination? Why was Mr. Caliendo never called as a witness by either side? So, let's be clear. Legally, a Ponzi scheme must be insolvent from the beginning. Factually, Oasis was not insolvent. Therefore, calling it a Ponzi scheme was false, and repeating it to the jury created a misleading and unfair bias against Michael DaCorta. On April 18, 2019, when the company was seized, Oasis Management's balance sheet looked like this. Added together, they show that Oasis's total assets at the time it was seized and shut down by the CFTC was $55,318,500.39, a far cry from the $17 million alleged by Mr. Chi, who said that the government had done an audit of the company. At a key moment in the trial, Mr. Chi lied, and the jury believed him. Even worse, defense counsel never objected. They didn't challenge Mr. Chi when he presented facts not in evidence. They also didn't correct the misleading statements made by Mr. Murray and Mr. Childers. As we explained back in video number 3, ownership, the people who funded Oasis International Group did so by signing a promissory note agreement and risk disclosures. Those documents made it 100% clear that the money was loaned, not invested. The money belonged to Oasis, not the lenders. The lenders were not investors, and Oasis had no legal obligation to tell them how the money was used. In legal terms, every time the prosecution used the word investor or Ponzi in court, defense counsel should have said, "Objection," assuming facts, not in evidence. But they didn't. If defense counsel had done its job and proven that the money came only from lenders and that it was owned by Oasis and that there was no duty to report its use, then the jury might have realized Michael DaCorta could not have defrauded his lenders because he had no obligation to disclose what he was accused of hiding. But that's not what happened. Instead, allegations were made without evidence. Facts that should have been introduced never were, and objections that should have been shouted never came. We don't know what's worse, failing to object to false claims or failing to present the truth. Because Michael had no duty to disclose how the company used its funds, he cannot be guilty of fraud for not disclosing, but he was convicted anyway, and that must be corrected. The civil case was built on the same error. In the civil case, the government claimed Oasis illegally ran a commodity pool. But that's only possible if outside investors pool their money. Since there were no investors, only lenders. No commodity pool ever existed. Yet the court granted summary judgment as if they had. That must be corrected. Michael's criminal conviction and the civil summary judgment are both built on a false narrative, misleading terms, unproven allegations supported primarily by innuendo. The government's failure to prove its case with factual evidence. The presentation of countless assumed facts, not in evidence that obscured the truth from the jury. And a complete failure to introduce or challenge key legal facts that would have helped the jury find the truth. In both the civil case and the criminal case, it's long past time for all of these errors and omissions to be corrected, without any further delay and as soon as possible.